We're taking a look at the currency market now with Shireen Darmalingam, who's macroeconomic strategist over at Standard Bank. Thanks so much, Shireen, for joining us today. Well, I'm not sure if you heard the conversation we were having just ahead of the break, but we were talking about very volatile inflows into South Africa. And of course, that is something that has an impact on the local unit itself. I've come through commentary saying that the South African rand may be set to weaken against the dollar as economic and social challenges conspire to curb investor demand for the currency. How are you weighting that as a factor relative to key global event risks this week and the outcomes that we see unfold on those fronts?
Yes, indeed, Alishia, we have weighted that for the currency. We are expecting the rand to weaken quite a bit towards the end of the year, and we are currently priced in a rand-dollar exchange rate of about 8.60. Yes, we have seen that the rand strengthened quite a bit yesterday on the back of global developments, and we are seeing the currency over the past couple of weeks remain wedded to what is happening in the global economic environment. We are expecting some kind of strengthening in the currency over the course of the next few days, as we have rulings from the German court as well as the FOMC announcements later, or rather tomorrow. So we are expecting some movements there which could possibly favor the currency. Yesterday we did see Moody's announce that they could possibly downgrade the AAA rating for the United States, and that we saw the dollar come under significant pressure, and that really caused the rand again to come towards the 8.13 level. We did see it very briefly weaken when we saw the current account deficit numbers come out. The rand actually shot from the levels that we saw, which it was trading for most of the day, towards about 8.22. So there was a significant depreciation of the currency, but it really strengthened again on the back of those international developments.
Of course, taking a look at the current account deficit number that emerged, I mean, economists by Reuters had expected that deficit to actually moderate slightly on the back of robust portfolio inflows. Did it surprise you that we saw a widening of that percentage of GDP for the second quarter?
Yes, it indeed was very surprising. We had expected, along with the market, for the deficit to have narrowed to about 4.8% from the 4.9% that we saw in the previous quarter. The deficit was driven by a larger trade deficit, which widened from about 42 billion to about 75 billion. And what was also surprising was the net invisibles account, which is the net service income and current transfer payments account, which also widened quite a bit. And that was on the back of larger dividend payments, particularly to foreign investors. We had expected a milder number from that net invisibles account, but what was concerning was the fact that the number increased quite a bit to 6.4%. However, we do believe that the portfolio inflows funded that deficit quite handsomely. So we weren't too concerned about that from the funding side. However, going forward, if we do see investor confidence slip with regards to South Africa, we could see a reversal of those portfolio flows, and then it really becomes very difficult with regards to managing such large current account deficits. But for the remainder of this year, we are expecting it to narrow towards the final quarter of this year.
Of course, Shireen, important to highlight is that with all the volatility that's been going on, not just in South Africa, but globally as well, I mean, apart from that brief plunge to a three-year low of 8.71 that we saw back in early June, the rand has held pretty much in a tight range of between 8 and 8.56 since mid-May. And some would say that's stable enough for a currency of a commodity-based economy.
Yes, indeed, we also believe that. We have seen that, as you mentioned, the rand has been trading in that range. We do believe that that's likely for the remainder of this year, but as I mentioned earlier, that there are significant pressures coming through for the currency from the political side and economic side as well. We did see the further numbers come through in the quarterly bulletin yesterday, which indicates that the domestic economy is still under significant pressure, and the manufacturing data as well. While the data came out slightly positive and indicated that we could possibly see a turnaround in the manufacturing sector, the details of that number indicates that there's still a large amount of trouble, and that the manufacturing sector is in troubled waters. And with the sector contributing quite a substantial amount of more than 15% to GDP, it's going to pressure the overall GDP number lower, and that's going to obviously pressure the rand weaker towards the end of the year.